Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday. Happy Friday, everyone. It is Friday, June 28th, and got a lot of data to kind of cover today, so we'll jump right into it. We'll start off with the personal income for the month of May. So the previous month, April, came in at 0.5% increase. Forecast will account for a slightly lower number in May at 0.3%, and came in the exact same number at 0.5%. So we're starting to see people getting paid a little bit more in April. So that's obviously a good sign for everyone. We're month over month, it's increasing a bit. Then we got the other end, consumer spending for the month of May. And April was a 0.6%, so people are feeling pretty good and spending more money in April. However, forecast is supposed to have a slight dip in May at 0.5%, and it came in a little bit lower at 0.4%. So people are making a little bit more money, but started spending a little bit less in May, is what we're seeing. Now, here's the Fed's fair gauge of inflation here. Basically, we got the personal consumption expenditure, and we also got the core PCE. It's also the PCE. A lot of people also call core real inflation, and that's just another one down here. So we'll start off with the headline number here. And month of April, we had a 0.3% increase. Forecast was calling for 0.1%. Came in at 0.2% growth here. So it's year over year dropped from 1.6% down to 1.5%. So we've seen this one drop here. Whereas this is what the Fed will look at for the core for its inflation number. This is favorite gauge for inflation. And what that means is that we strip out variables like food and energy that you can't control those costs. So they remove those, so we get a little bit more of a stable number here. And as you can see, we had a 0.2% increase in April, and then the forecast for May, same thing at 0.2%, and it came in at expectation of 0.2%. However, it's the core year over year went from 1.6 to 1.6, so it remained unchanged. And the Fed likes to keep inflation up to 2%, so we're well below. This could be another sign of encouraging the Fed to go ahead and cut rates coming here in July. So this is kind of an important data to review before the Fed's next meeting at the end of July. So to continue on the economic calendar, we got a lot today, as you can see. We got manufacturing in the Chicago region for the month of June. So in May, we had a 54.2. So anything on this index is considered expansion and optimism. Increase here in the month of June, in May. However, in June, it contracted. So anytime we go below 50 on this index, it's a contraction. And it came in at 49.7. So obviously, we're seeing a lot. We have been seeing this quite a bit here in the manufacturing, and a couple more right on the border of contraction. So manufacturing, as we're seeing, it has been pulling back quite a bit lately. Last but not least, we got the consumer sentiment final numbers here for the month of June. So last month in May, it was at 97.9. Forecasts were calling for 98. Came in slightly higher at 98.2. So good overall numbers here. We're seeing some people are still feeling pretty good about where things are at overall. So let's kind of jump ahead here to the headline news. Stock market is up, but it's not really trading a whole lot. Basically, everything is kind of revolving around this G20 meeting here that's taking place starting today. Of course, they're anticipating the meeting for tomorrow between the two presidents, U.S. president and Chinese president, President Xi and President Trump, meeting tomorrow. So that's really what the markets are watching. For the stock market, it's basically going to be a break-even week, possibly down a little bit, but it's not moving a whole lot. Bond market, kind of same thing. This is what's really controlling the markets. This meeting, everybody's anticipating this meeting. Now, what's ahead? This, as we've been hearing, we're 90%. Even before we had the Stalin talks, we're at 90%, and it was reiterated that we're at 90%. So, stock market got a little excited, thought that we're continuing, and we got a little bit further, but we were no further than where we stopped at. So. There's a lot of demand, so there's some pretty big gaps. That last remaining 10%, there's some pretty big gaps in between those, and it will have to be interesting to see if if those gaps can be closed between the two leaders, and so we can continue talks and move it forward, or we'll talk, or the biggest thing that the investors are going to be looking for is the U.S. can continue with their trade tariffs and also the the with Hawaii, are they going to continue with that as well? Those are kind of the big ones that they're looking towards, the retaliations and everything. So let's see how this is playing on the bond market. The bond market is up about 2 basis points. So we're not really up anywhere. We're getting pressure from this ceiling of resistance right now. So we're only 2 basis points. So there's no change in pricing today. Remain unchanged. And then as you can see, it's kind of about the same thing. We're at basically at 2% right now on the yields here. We've tested this ceiling of resistance, and we're kind of at that 2% level, kind of pulled back where we started the day at. So again, I hope you guys enjoy your weekend. Mortgage rates unchanged from yesterday's pricing, and look forward to see you guys on Monday. Enjoy the weekend. Thanks so much for watching. Bye-bye.